Okay, anak-anak, we will continue with video number 2. Okay, either American versus European or direct versus indirect quotation, they are reciprocals of one another. Okay, reciprocal means the quantity obtained by dividing the number of one. Again, by dividing the number 1 by a given quantity. Okay, we will see about reciprocal calculation in our later slides. Okay, most of the country use direct basis quotation. However, newspapers and trader terminologies vary berbeza-beza, and it is useful for us to be aware of different exchange rate treatments. Okay, so hati-hati bila kita baca je any report on the foreign exchange rate, so you have to be very careful which currency is on many side unit, which currency is on one side unit, are there direct quotations or are there indirect quotation. Okay, so we shall use the direct basis quotation in our discussion. Okay, understanding exchange rate and the concept of appreciation and depreciation. Later throughout this chapter, we will assume Malaysia Ringgit as the home currency, while the USD and other currency as the foreign currency. An exchange rate is volatile, and a reciprocal of the exchange rate between the two of them, which is 1 per exchange rate. Okay, don't worry. I'll explain later about reciprocal and how to calculate. Okay, the how to do the reciprocal calculation. Okay, since an exchange rate involves two currency, one currency's depreciation is the flip of another currency's appreciation. Okay, like we have discussed in video 1, I have explained about, okay, previously back in 2019, to buy 1 USD, you need 4 ringgit and 14 cent. But as at today, October 2020, to buy 1 unit of USD, you need 4 ringgit and 16 cent. As you can see, in that scenario, our currency has depreciated. When our currency depreciated, when ringgit depreciated, meaning to say at the same time USD appreciated. Are you with me? That's why it said here, it says here, one currency's depreciation is the flip of another currency's appreciation. Okay, calculating exchange rate changes. Okay, assume the exchange rate of ringgit Malaysia ringgit per USD goes from, okay, dia bagi kat kita awal-awal at the beginning, ringgit Malaysia or Malaysia ringgit 3.8081 per 1 USD. Now it has changed to 4.0050 ringgit Malaysia ringgit per 1 USD. As we can see, previously, to buy 1 USD, you just have to pay 3.8081 ringgit. But now, to buy 1 USD, right, you have to pay 4.0050 Malaysia ringgit. Or, previously, if you have 1 USD, if you convert into ringgit, you will get 3.8081. But today, if you have 1 USD, you convert into ringgit, you will get more, which is 4.0050. Meaning to say, Malaysia ringgit has depreciated, USD has appreciated. Come again, Malaysia ringgit has depreciated while USD has appreciated. Okay. In this situation, okay, the explanation come later. USD is said to be appreciated relative to ringgit, or in another word, again, Malaysia ringgit depreciates relative to USD. Why is that? Okay, I have explained just now. Alright, previously, to buy 1 USD, alright, it only took 3 ringgit and 8081, okay, Malaysia ringgit. But now, it costs you 4.0050 Malaysia ringgit to buy 1 unit of USD. Okay. The general formula to calculate the dollar appreciation against ringgit is as follows. To calculate the percentage of appreciation or depreciation, the formula is you take the new, okay, let me correct this first. I'm so sorry. This should be ringgit. Typo. Okay. Again, the formula is you take the new quotes of ringgit per USD minus the old quotes of ringgit per USD, divide with the old quotation or exchange rate of ringgit per USD times 100%. Or we can simply write down E1 maksudnya the new exchange rate minus the old exchange rate divided with the old exchange rate times 100%. Okay. So currently, the exchange rate is 4.005 minus the previous exchange rate 3.8081, and then you divide with 3.8081 ringgit. All these value are in ringgit per 1 unit of USD times 100%. So you will get 5%, okay, appreciation. So the 5% appreciation is actually represent the dollar as appreciation. Okay, bukan ringgit punya. Ini bermaksud dollar yang appreciate. Okay. Since we are adopting the direct basis quotation, a positive percentage change represent here. Alright. Alright, it actually represent the appreciation of the foreign currency, in this case the USD. But if you get negative here, alright, contohnya kat sini bukan 4.0050, kat sini 3.5000, for example. Of course, you will get here negative sign. So, while if you get the negative percentage change, it represent depreciation of foreign currency. So in this case, you get 5%. So it shows the appreciation of USD, meaning to say at the same time, it shows 5% depreciation of ringgit. Okay, to prove that. Okay, let's take a look at this one. Okay. Based on the previous example, alternatively, we can also calculate we can also calculate the depreciation of ringgit. Okay. If E, which is the exchange rate, equals to ringgit per dollar, then dollar per ringgit must be the reciprocal of 1 over the old exchange rate. Ini kita nak belajar how to calculate the reciprocal punya situation. Okay. Based on the previous example, okay, we are given with the old exchange rate is 3.8081 per USD. And then it's changed to ringgit Malaysia 4.0050 per 1 USD. Okay, if you want to convert, okay, we want to switch. Instead of Malaysia ringgit per USD, kita nak tukar kepada USD per Malaysia ringgit. So what you can do, this is what we call reciprocal. You take 1 divide with the old exchange rate, 1 bahagi 3.8081, the answer will be in USD per 1 unit of ringgit. So that is what we call reciprocal relationship. Okay, kita boleh tukar by simply, okay, 1 bahagikan with the old exchange rate. So the answer will give us USD 0.2626 per 1 unit of Malaysia ringgit. And then the currency has changed from 3.8081 ringgit per 1 USD to 4.0050 ringgit per USD. So if you want to switch into USD per 1 unit of ringgit, so kita akan ambil 1 bahagi 1 divide with 4.0050 ringgit, the answer will give us USD 0.2497 per, again, the answer will give us USD 0.2497 to per 1 unit of ringgit. So as we can see, previously berapa? Kalau dalam USD per ringgit, the old exchange rate is USD 0.2626 over 1 unit of ringgit, and now, okay, it has changed to USD 0.2497 per 1 unit of ringgit. Okay, ini kalau dalam, if we take a look at ringgit per USD, dulu nilai dia kecil, sekarang dia nampak besar. Bila nampak besar maksudnya apa? Our currency dah jatuh. But in this case, USD per ringgit, dulu nilai dia besar 0.2626, but now it exchange to 0.2497 per ringgit. Nilai dia dah kecil, itu maksudnya USD dah jadi mahal. Okay. Alright, so how to calculate the appreciation or depreciation? Now let's use this quote. Okay, kita guna USD over ringgit. Okay, so again the formula is E1 minus EO over EO, but in this case we will use USD per ringgit. So USD 0.2497 here minus the EO 0.2626, and then you divide with the EO, the old exchange rate, 0.2626 times 100%, you will get negative. Alright, negative 5%. So the negative signs here actually represent the ringgit depreciation. Nilai kat sini semua currency is actually in US per ringgit. You get negative, but actually it represent the ringgit depreciation. Macam dalam slide yang sebelum ni lah. Okay, let's recall this one. You get, okay, you use ringgit per USD punya quotation. The answer actually belongs to the dollar appreciation. Okay, kalau yang ni kita guna kod yang mana? Kita guna USD per ringgit. Alright, the answer you get negative represent the ringgit depreciation. So again, one currency appreciation is actually the flip of kind of another currency depreciation. Again, saya ulang balik. One currency appreciation is actually the flip of coin of another currency depreciation. Kalau currency kita appreciate, currency yang lawan dengan kita akan appreciate. Ke saya salah sebut. Sekali lagi, if our currency appreciate, the other currency will depreciate. Sebab dia bunyi lebih kurang sama. Appreciate, depreciate. Saya takut saya salah sebut. Okay? Okay. Alright, let's take a look at this one. The smaller the value of exchange rate seems to look like it is actually appreciation of home currency and depreciation of foreign currency. For example, this one. Alright, previously let's say the currency is 4 ringgit per 1 USD. Okay, now it has changed to 3 ringgit and 50 cent per USD. What does it mean? Okay, dia nampak the new exchange rate nampak it seems smaller. When the value looks smaller, it actually represent the appreciation of the currency, the home currency. Okay, the bigger the value of the new exchange rate seems to look like, it is actually the depreciation of home currency and appreciation of foreign currency. Contoh, previously, alright, it is 3 ringgit and 50 cent per 1 USD. Now it has changed to 4 ringgit per 1 USD. Walaupun nilai sekarang nampak besar, it actually represent the depreciation of our ringgit home currency, and at the same time it represent the appreciation of foreign currency. Okay, again, kalau saya ada slip of tongue, tengok dekat slide. Okay, now let's talk about the factors affecting the foreign exchange rate. Okay, the first one, inflation rate. Okay, inflation rate in one country, if one country has low inflation rate, it represents that the goods and services provided in that particular country are now at low price. So kalau low price, it will increase the export. Okay, people will import, other country will import more from us. When the import increases, the demand of our currency will increase. Okay, when the demand increase, the value of currency also will increase, and vice versa lah. Okay, and then the interest rate. Of course, when we talk about interest rate, we have two type of interest rate. Interest rate of lending or interest rate of borrowing. In this case, we are talking about interest rate on lending or deposit or investment. Okay, if one country, alright, offer high interest rate on deposit or investment, it will attract foreigners to invest in our home country. Okay, so there will be more demand of our home currency, and then it will increase its value. And then income level. The higher the income level, meaning to say people have more money to spend on import good. So there will be more import, and then as we have learned before, the greater the import, meaning to say we are actually demanding for foreign currency more, and it will weaken our home currency value. Okay, foreign currency value yang akan naik, our home currency value will become weaker. Okay, weaker. And then the country's current account or balance of payment or term of trade. Either it is facing with deficit or surplus. Please recall what we have learned in chapter 2. If our country is currently facing with deficit, one of the measure is to devalue of our currency, because why? We want to reduce the amount of import. Okay, so depends lah. Kalau currently our currency is facing or running a surplus, okay, account, itu maksudnya duit kita banyak. Okay, right, we can buy more foreign currency, for example. Jadi it depends lah, either you are currently facing deficit or surplus. And then government debt. Country with high debt is less likely to have foreign capital inflow. Negara yang banyak hutang, most of the foreign investor will become less attracted to invest in our country. So which will lead to less demand, which will lead to less demand of our home currency. So our home currency will drop in value. Okay. Political stability and performance, of course, if our country have a very stable political situation, okay, all right, and the country is having a very good growth rate currently, so it will attract more investment from another country. So there will be more demand of our home country currencies, and the value will increase. And then recession, of course, will push away the foreign investor because of the low interest rate offered. Masa recession normally, what the central bank will do, they will cut down the interest rate, okay, because they want to make sure more amount of money circulated in the market. People can borrow at a lower interest rate. Tapi bila interest jatuh, it will become less attractive to investor. Okay, and of course you can read all these factors that can affect foreign exchange rate in the note that I will share with you in Telegram group later on. Okay, functions and structure of foreign exchange or forex market. Okay, the structure of the foreign exchange market is an outgrowth of one of the primary function of a commercial bank, commercial banker or commercial banks. One of the main role of commercial bank is to assist client in the conduct of international commerce. All right. Currently, most of the businesses have become globalized. Okay, have entered into new market segment in the foreign countries. So of course, they need commercial bank to assist them in doing all the international trade and business. Okay, for example, a corporate client desiring to import merchandise from abroad would need a source of foreign exchange if the import was invoiced in the exporter's home currency. Of course lah, when we buy from another country, we have to pay in their own currency. So we need for the commercial bank to help us with that. Okay. Alternatively, an exporter might need a way to dispose of foreign exchange or foreign exchange currency if payment for the export was invoiced and received in the importer's home currency. Let's say Singapore bayar dekat company in Malaysia, they pay in Singapore dollar. Of course, we need to change the Singapore dollar into ringgit because we are Malaysian company running in Malaysia. So duit daripada negara luar kita dapat from our export to them, alright, will need to be converted into our home country. Kita nak bayar supplier kita lah, apa semua dalam negara in our home currency. Of course, we need for commercial bank to do that for us. Okay, alright. And then assisting in forex transaction of this type is one of the services that commercial bank provides to the client. And of course, these are one of the service that the bank customer expect from their bank. Okay, alright. And then we also have spot and forward forex market, and these two type of market in the forex market, spot and forward, are actually over the counter OTC market. Which, what does it mean? Alright, the trading doesn't take place in the central marketplace where buyer and sellers congregate. Alright, so it's just over the counter. Dia tak ada central marketplace such as to trade stock, we will have Bursa Malaysia Security Berhad. To trade in futures market, you will need for Bursa Malaysia Derivative Berhad. But for you to trade in currency, okay, the forex market are merely simply over the counter market. So what does over the counter market? It is actually a worldwide linkage of bank currency traders, non-bank dealers, and forex broker who assist in trade. They are connected to one another via a network of telephone, computer terminals, and automated dealing system. Okay, dia orang semua participant in the forex market are actually connected to each other dengan syarat ada telefon, ada komputer, alright, ada automatic dealing system, dan yang penting ada internet connection. Alright, then you can trade in forex market. There is no specific standardized central marketplace for you to trade in forex market. Reuters and electronic broking services, EBS, are the largest vendors of code screen monitors used in trading currency. Reuters, Reuters tu sebut dia Reuters. 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 Okay. So pronounce it properly, not Reuters, Reuters. Okay. Foreign exchange market segment. Okay. So the foreign exchange market segment can be divided into three major market segments. There are Australasia, which includes trading centers of Sydney, Tokyo, Hong Kong, Singapore, and Bahrain. And then we have Europe segment, includes Zurich, Frankfurt, Paris, Brussels, Amsterdam, and London. And finally, we also have the third market segment, which is North America, which includes all these cities. Okay. And then the market for forex can be viewed as a two-tier market. The first one is interbank money market, wholesale market. Okay, ini melibatkan bank. Interbank money market, nama pun interbank money market, it will involve interbank money market activity and transaction, or client market, retail market, individual trader berada bawah market yang ni, client market. Okay. Alright. And then let's talk about the forex market participant. Okay. The first one is international bank. Okay. Alright. So they serve their retail client in conducting foreign commerce or making international investment in financial asset that require foreign exchange. And then bank customer include MNC, multinational corporation, money manager, alright, all the traders in the forex market, non-bank dealer. The third one is non-bank dealer. There are large non-bank financial institutions such as what? Such as investment bank, mutual funds institution, pension funds. Okay, so those are non-bank dealers. And then we also have forex brokers. All right, these are the people who will match the dealer's order to buy and to sell currency, and of course they will charge with a fee. Okay. And then we also have central bank and national monetary authority. Okay, the thorough explanation you can find in the notes that I will share with you. Okay, and then this is the Malaysia's payment system. Also, you can read the thorough explanation in the notes. Okay, the type of payment system in Malaysia can be divided into two: large value payment system, SIPS. Okay, they use rentas, real time electronic transfer of fund and securities, rentas. Okay, ia adalah satu sistem lah untuk pembayaran in Malaysia. And we also have retail payment system. Kita sebagai pengguna biasa ni kat bawah sistem mana? Retail payment system. Kita guna dia punya ATM network, IBG, check, credit card. Alright, so these are basically the types of payment system that we have in Malaysia. You can read all those things in my notes. Okay. Okay, so we have done with chapter, or not done with chapter 4. Alright, we have done with the introduction part of chapter 4. So I will share more video with you in next coming week. Okay, see you. Assalamualaikum.